Well, as we kick off the new year, we want to help you better understand how the economy is impacting your wallet. We've got Bruce Allen, a local financial expert here, and thank you so much for coming. It's great to see you. Wanted to start with big picture economic outlook for this year. What are you keeping tabs on?
Well, I think we're coming into 2026 with a sense of renewed optimism. What we saw in the third quarter of 2025 was that the economy grew at over 4%. That's a big number for the U.S. We don't know what the fourth quarter is going to be yet, but on December 10th, the Federal Reserve upgraded their forecast for U.S. economic growth, and their top line was that we might see 2.1%. They bumped it up to 2.5% at the top end. Doesn't sound like much, but for the Federal Reserve, they're kind of conservative folks, and but going up 0.5% is a big number. So we see 2.5% growth in the U.S. economy, and many private forecasters are looking at the economy growing at that level as well.
Wow. I think the big question, right, for a lot of people is, what does this ultimately all mean for interest rates?
Sure. I think the key thing is that the Federal Reserve is now seeing that inflation, which is running at close to 3%, may, and I should say this is an educated guess at best, may slow down to around 2.5%. Again, the Federal Reserve, who controls short-term interest rates, is looking at inflation cooling off to 2.5%. And we saw on December 10th, the last meeting of the year, they lowered their forecast for inflation from 2.7% on the high end to 2.5%. Again, doesn't sound like a lot, but again, that means that there's room for the Federal Reserve to lower interest rates 2 times, from 3.75% down to 3.25% at the top end. The question that a lot of people want to know is, what is that going to do for long-term interest rates? And that's really dependent on who is going to be the next Federal Reserve chairman. Because Jerome Powell, who many market participants respect, is retiring as chairman of the Federal Reserve in May, and the president will pick a new chairman of the Federal Reserve, and that person, who that person is very important for how the markets perceive long-term rates.
And before I let you go, when it comes to the stock market, what kind of insight can you give us for this year?
Oh, there's predicting the weather, predicting the stock market. Both are difficult to do. Predicting the future stuff, but I think what we're seeing is, if you look at the earnings estimates for a lot of both large company stocks and small companies, the earnings estimates are pretty robust. What we're seeing is that their earnings estimates for the big stock index is around 13%. Take out tech, you're looking at about 10%. So that's a pretty good growth rate, and the earnings for small companies are even faster than that. So as we look at this, many people are optimistic because it looks like the economies should be having a good year, and that may mean that we may have good growth in the economy, in the stock market as well.
All right. Well, thank you so much.
That's
for
my best
guess.
By.
Yes, we love to hear it. And we always appreciate your insight on this. Thank you so much.
Good to see you again.
Let's get a check of the weather with Lisa.
Oh, see, Bruce just proved it. We too have the hardest jobs in the studio.
That's right.
I got your back, buddy, if you got mine.